Hi, this is Daniela Cambone, and welcome back to StansberryInvestor.com. Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside, like Riot Blockchain before it shot up 10,000%, Digital Turbine before it shot up 789%, and Overstock before it shot up over 1,000%. This power gauge comes from the legendary Mark Chaikin. And right now you can get a free in-depth look at how his power gauge system works. A way to type in any of the 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugetrial.com for your free look. Again, that's powergaugetrial.com for your free look. All right, let's get to our segment today. Hi, this is Daniela Cambone, and welcome back to StansberryResearch.com. Our 2022 outlook, The Tipping Point, continues with my guest today. Please welcome back to the show, David Morgan of the Morgan Report. David, Happy New Year. Always good to be with you.
Well, Daniela, likewise. Thank you.
So, as you know, the last time we spoke was a few months ago. It was August. And that video was an absolute home run, with over 1.4 million viewers listening attentively to your warning at the time. I'd like to pick it back up from that conversation, David, since it resonated so deeply with our audience. You were warning the folks about a bail-in. And I think part of the reason the video was so popular is that, we've heard you speak about silver and the metals, and you're not one who really comes out with these dire warnings, but you were really concerned. You called me up that morning and said, look, we have to do this interview ASAP. You did it from your car. So I just want to touch base with you. Here we are, the start of a new year, and how you see things today. And just to give some context, you spoke about, during the next financial crisis, instead of a bailout, we would see a bail-in. And the risk there is that we are all, unsecured creditors of the banks, and we could potentially lose the money that we have there.
Yeah, great start. Just to reiterate it a bit, the conditions are fact, so I didn't get much pushback because people took the time to check out what I'd said, verified it. And it's even getting worse, in my opinion. In other words, the chances of a bail-in actually taking place are greater. And the reason I say that in some jurisdictions, it's required that you have a medical procedure. And if you don't have that medical procedure, you can't have access to, let's say, food or even your banking system. So that's the trend that is beginning, and I think it will continue. So the idea that what you said, repeating, you're an unsecured creditor, that money, quote unquote money, what we consider money, the currency in whatever jurisdiction you're in, and I'm referring to the bail-ins in North America, it's really not yours. So the best way out is to hedge. Doesn't mean you take everything out of the bank. It means that you hedge yourself. And the best way to hedge is to go into the precious metals. So if you wanted to move a lot of money or move it into currency, stick it on your mattress, that's impossible, almost impossible. But the easiest way to do it is to write a check or do a wire and wire to a precious metals facility and take the money, the gold or silver, home, or store it in a facility that you trust. And that's a whole different topic, but that's the easiest way to hedge yourself. If you've got a 6-digit bank account and you're worried you want to move 20% in the precious metals, write a check to a good dealer, and there you've done it. So that's my take on the situation. I think we're getting closer to, and I don't want to call it a fear card, I think it's a reality card.
Okay, I just want to go back to something you said there about the medical condition. Can you just explain that a little bit more? What do you mean by that?
Well, there's vaxxed and unvaxxed, and if you're not vaxxed in some jurisdictions, you can't have access to food. You can't go in the grocery store. And in other jurisdictions, you can't. And I think it's proposed, I want to be very accurate when I state something that's quote unquote a fact. It's my understanding that it's either a fact now or soon to be that you can't access a bank account in some jurisdictions without having to vax. That's what I mean.
Okay, but online you would be able to.
Well, that gets, I don't know, I won't be inaccurate here, but a lot of this stuff I think is kind of scaremongering on their side. In other words, the authority figures are trying to scare us into compliance. And just because they say they're going to do it doesn't necessarily mean they'll follow through.
Yeah.
Or they'll start the scaremongering and follow through in a slight way, and it gets so much pushback that they have to cease. So I'm trying to be very clear in my outlook here, but it's in such disarray across the board. I mean, I don't want to go too big of a tangent here, but
Right.
it's the financial system, it's education, it's the pharmakia. I mean, it's everything out there. What can we trust? And the idea is you can't trust hardly anything anymore.
It's quite sad, in fact. But I think what was really eye opening for a lot of folks from that interview, David, that we did, is that we join a bank. You see the advertisements. They create this, it's a comfortable place. Come on in. It's your second home. You sign away. You open a bank account. You think that's my money. But one thing you always tell the folks is read the fine print. Even when you're buying gold and silver or whatever,
Oh, yeah.
read the fine print. We think that's our money. But for the folks at home who missed the first episode, can you explain how it's not necessarily our money, what's in the banks?
Yeah, all you have to do is read it, verify it for yourself, but you become, as you said, an unsecured creditor. So once it's in the banking system, it's basically their money at law. So of course you have access to it. And I don't know what he's talking about. I just went to my ATM and all that's well and good. And that's what's generally understood. But when the rubber meets the road, when the hard ball comes across the plate and you swing at it and hit it, the bank has the authority, because you've signed a document, that they can use it as required. So if there is a financial failing taking place, they can do what they did in Cyprus, which means they can access your cash, your account, your digital money, and save themselves and give you a stock certificate as an owner in the failing bank. Whoop-de-doo.
So we spoke about how you're protecting yourself, but just to take it one step back, I've this is our Outlook series. I've had many guests on really concerned that 2022 will be the year that we would see a massive correction in the stock market. Some people will say, well, that's just a fear card. They've been saying it for a long time. But you haven't really been saying it for a long time. So I just want to get your thoughts. Are you really concerned that this is the year the market really has a serious correction? And by serious, I mean over 20%.
That's tough. I always want to be right. I think it's possible, and I think it's more likely than not. And the reason being is last time that the Fed said they were going to taper and they started to move up interest rates in a serious way, we had a 20% correction. And then that made them full of fear and they reversed course. I think we're set up in the same way this time. We have the Fed rhetoric saying that they're going to increase interest rates. And the same time, if you check my Twitter feed, China has lowered theirs, first time in 20 months. So once this took place in 2016, what we saw that gold found a bottom, didn't crash, found a bottom. And once the Fed said, uh-oh, we made a mistake, gold took off massively. So did silver. And that's what I expect again. In fact, what I expect is that instead of being a repeat of 2016, it'll have a lot more traction, because at some point, the bond market is going to face reality. And the reality is that you can't print yourself wealthy.
Let's talk about sectors you're really, really looking at now, then, David. I mean, we know you like gold and silver. Are those still the best bets for you?
Well, I think energy's got to be discussed. I think energy is really misunderstood. I am a believer in peak oil. I do think it's a reality. I know I just read a bunch of things this morning, and I keep on this news, as you well know, about how well the United States is going to do in energy in 2022. And I don't doubt that. But longer term, looking out, and not even that long, 3 years, maybe two, there's going to be the energy cliff, where basically it's very difficult to maintain the amount of energy required for the globe as we disengage from traditional energy and move into green friendly energy. But there's not enough silver in the world to produce the American homes with solar power on their electrical base right now. In other words, you could not put enough solar panels out there to power just the homes in America, because there's not enough silver to do so. Now, let me be very quick to add, that's under current technology. So if the technology were to change, then maybe it would be possible. But that's just the homes. If you take in the commercial activity, which is 1.5 times greater than a residential activity, you're looking at about a 3 or 4-fold increased demand for silver to make solar panels that doesn't exist. And so it's not just about silver, although that's a key component of a solar panel. It's about this whole idea that we can run the world on green energy. You can't,
Yeah,
not
I
yet.
think right, right. And I think, I think the question is, has the time finally come for mass adoption of solar power, David? Because for the longest time, we've been hearing how silver is, going to be a key component in the green revolution, in solar panels, but it hasn't been reflected in the price yet. So is it because that revolution, that green revolution, hasn't really exploded yet?
Well, that's only part of a much bigger picture of the silver market, but your thinking is very accurate. Part of it is the demand. And this year, I think the demand is predicted to be 140 million ounces just for solar. A really good year is 100 million. It would be 200 million right now, except of what the Silver Institute calls thrifting. Thrifting means that you're using less silver to get the same output, which I'm all for. That's what a free market's all about, making the best use of the resources that you have. But I think also you're going to see some countries that may look at their silver supply as an energy source for solar. And this might curtail some exports. Now, if this is a wild card, and I'm not saying it's for sure, I'm just thinking about it. But if you were in Argentina, Chile, Peru, or some of these South American countries or other countries that have a pretty good silver supply, and you haven't built out your grid all the way, and solar looks like the way to go as far as you're concerned, it's not the most efficient, but that's what you decide. Then you might decide to curtail your exports and use it internal in your country to provide power to your people.
Let me ask you this on the topic of silver here, David. I know you have editorial educational material out there on top 10 tips if you're looking to buy silver. You've done extensive work there. I'm not going to ask you to list all top 10, but for the folks listening back at home, can you bring up let's say top 3 things to look at if someone is looking to diversify and add silver to their portfolio this year?
Sure. It's in the investing rules book. If you want to see all 10, you just go to 10 Rules of Silver Investing by David Morgan. It'll pop up on any search engine. But rule number 1 is no one wants to be a prophet of doom. But in the unlikely event that there is an all-out financial collapse, silver will be the money of last resort, not gold. Gold will have too high a value to carry out day-to-day activities where silver will be used. And in that case, all investors should have a small silver supply that they could keep at hand. That's rule number 1. Another rule, I don't remember what number it is if you want to gain, once you've got a secure supply, and doesn't have to be a very large amount of your total portfolio, that's real metal, then you can move in and gain leverage in mining shares. And this is where, I get a lot of criticism about my predictions on the silver price, although, when I started, it was below 5 and now it's 25. So it hasn't been like horrible, but it certainly hasn't been what a lot of silver bulls have expected. But a lot of the companies that we have followed are up, major companies are up like tenfold. I mean, if you look at the dividend on Pan American, for example, if you started when I did, that dividend was like a lousy 1%. But if you bought it when I bought it, you're getting about a 10% dividend. And that's what investing is all about. So, there's a lot pro and con. So that's a second one you asked me for 3. And the last one is something along the lines of, no matter how good a market is or how compelling the evidence is, too much of a good thing is too much of a good thing. For all portfolios, I recommend an exposure of about 10%. Now, there's an asterisk to that, Daniela. And this was in San Francisco years ago, I think the Silver Summit, or I think the Money Show, I spoke on the topic, and we were getting into the Mideast war, how many years ago that was. And I said, I could go as high as 20%. Now, if you look at more of the establishment types like CPM Group, from 1968 to present day, they ran a study, they recommend 25%. If you look at the Ibbotson and Associates independent study on the precious metals, it's somewhere between 15 and 25%. So I'm not out of line to say 20%, but 10 is probably best for most people. That gives 90% of their money to put in real estate, the stock market, the bond market, private equity, start their own business, you name it. And if you do that and silver goes nowhere for 5 years or even 10, you're not going to have a big, problem. You're going to be maybe a little ticked off. It's not doing what you expect, but you've balanced your portfolio. Remember, it's normally a hedge position. The only time that you've got to have it is when nothing else works. And those events are once every 400 years. And believe it or not, to kind of backtrack, I think we could approach that. And that's basis the bail-in that we started this conversation about.
Just to bring it home, David, this is our Outlook series. New Year's, as you know, are times for resolutions, reflection, whatnot. I guess just final thoughts for viewers watching as we start 2022 here.
Well, my final thoughts are that, you know, whether you believe in God or not, there's natural law. And the closest thing in man's, women's existence is the natural law of the free market, where there's no interference. And if you have a true free market, which we really have never experienced, but we've had it close to a free market at times, when that takes hold, then the value or the cost of money, i.e., interest rates, are determined by the market itself. And almost everything flows from that. But when man knows better than the nature, there is a price to pay. And we've been building this false paradigm about being able to print wealth and the cost of money or interest rates for a very, very long time. And because of that fact, the disruption that is natural will take place. There's no way any banker on the world can stop what's coming. We're going to have a much higher price to pay than if we had allowed natural law or a free market to determine how the economy really works. It would not be near the distortions we have now.
And again, not to play the fear card, and that's really well said, David. Are you speaking about a complete implosion of the financial market?
No, we've got to remember that if there's a complete total financial meltdown, all the wealth stays in place. That's a real important mindset. So if all the banks close, there's still all the buildings, all the schools, all the roads, all the oil, all the corn, all that stuff is there. So now what happens? Well, now we have to sort out how the system reboots and revalue or reprice things to more what I've just called, natural state. And so you might find where food is, a quarter of your budget instead of 5% of your budget, as an example. Maybe your energy costs are 15% of your budget, that type of thing. And it's just part of the greater big picture. And that's what I'm trying to convey. Hopefully that made sense.
It does make sense. Just a final thought I want to get from you. You just kind of sparked that question in my mind here on inflation. We're speaking the week that the latest inflations from the Labor Department has come out. They're now saying it's around 7%, but it's almost become a farce at this point. I mean, does anyone really believe these numbers? Do you?
Oh, of course not. I mean, I follow John Williams' work quite extensively, and it's well beyond 7%. It's 7% with their metrics. And remember, they take out of core inflation, they take out food and energy. The two most important things of human activity are food and energy. And that's not in core inflation. Core inflation should be food and energy, period. That's what core inflation should be. And of course, they obfuscate the whole idea because they want to keep interest rates down, because if interest rates come back up, there's no way they can pay the interest on the federal debt. And so there's a lot of tough trudging ahead. Doesn't mean the end of the world, doesn't mean the financial system stops, it doesn't mean any of that stuff. It just means a realignment to more, let's say, a natural way of doing things,
Right.
or maybe another method. And this is where, I've spent my whole life is resisting the money powers of the banking elite, getting a more equitable system. They have their ideas in mind. I have my ideas in mind. And it's going to be very interesting to see how this thing really plays out.
But at the end of the day, it does impact the regular folks.
Absolutely.
Even if we have that runaway inflation, and salaries are not matching the prices that we're seeing in grocery stores or whatever we're buying here. So
Lots of
that's
hardship ahead. I'm going to tell you, there will be. But that spells opportunity. And the best way to get rich during the Great Depression was to find something that people needed and make it.
David Morgan. I appreciate your thoughts as always. Come back anytime to Stansberry Research.
Thank you, Daniela.
And thank you so much for watching. We'll have much more for you, so be sure to stay tuned to stansberryresearch.com. And don't forget to sign up for premier content you can't get anywhere else at danielacambone.com. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.